The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 18th Magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Of course, in that subject heading, please put radio show question. And inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 68 points, 22,336 is what she's printing. S&P is up 5, 2505 is the number that we can see that it's trading at. The NDX 100, 15 points, 0.25%. Russell 2000 up 0.75%. That's up 11 points. The semis are up 1 7/10% out here. Another strong move in the semis. Transportation index down just slightly. Gold's off $15, trading out at 13.10. Silver off 53 cents, 3% to the downside. 17.16 is its number. Light sweet crude off 16 pennies. Lead the charge here to the upside. Dollar-wise, you've got net ease. Sorry about that. Up $20 or 7.5%. Priceline up $18, 1%. NVIDIA having another strong session, gapping up this morning, up 5% or $9 and change. Applied up to electronics, up 13% or $7.50. To the downside, it is Chipotle, down nearly $10 or 3%. Equinix is down $5.50. That's about 1 2/10%. Ubiquity Networks down 9.5% or $5. Amazon off 5. Google's down 4. Aaron's Inc., I think the rent-to-own place, they're down about 9% or $4. Of course, I want to look at what you want to look at, so just reach out to me one way, shape, or form. So what are these markets doing out here? Let's look at what do we want to look at? Let's look at what the markets are doing in the short-term time frame out here. Because if there's going to be a change in trend, it's going to occur in the short-term time frame first. Let's start with the ES mini, and we'll work our way into the S&P 500. Again, we're looking at a 30-minute time frame, which shouldn't impact folks that are longer-term investors out here. Here's what we can see that has occurred thus far. We saw price moving higher, doing it with less relative energy. That was that nice spike this morning between at 10 o'clock. Between 9:30 and 10, as price was moving higher, you see that black diagonal line that was drawn automatically on my screen. That was telling us that price was moving higher with less relative energy. Is that a problem? It's only a problem when the actual bears show up. Well, in this case here, for the ES Mini, the bears showed up right here at 12 noon. And that took price right down below Stevie's red line. So a key level to be watching right now is 2504. On an intraday basis, we have an intraday sell signal. Took place with regard to that bearish engulfing candle that formed at noon. Now, the key here on the ES Mini, there's a couple of them. The first thing is price has made its way right down to a level of support. Now, I wonder how I can do this. It's going to be easier if I switch over and I start a new screen out here. So let me do that. I think that's going to be easier for you to see the market profiles because I can turn them on and off. I mean, I can turn price on. Well, I can turn them all on and off. But in this case here, I want to turn price off. So the blue lines that show up here are our current 30-minute profiles. Now, you'll see what I mean when I turn price off because it's very key to be paying attention to the structure of this current box out here. Charts seem to be working, Bob. But Al will check that out inside the den. If there's any other denners that aren't seeing charts, let us know out here. But, Bob, if you were taking a look at this chart, if you could see it, you would see that the last set of blue horizontal lines, the center of the box or the middle line inside the box is at 2503, closer to the bottom at 2502.75 out there. This is a bullish structured box. So if the short-term topping signal that we got out here with Stevie's beautiful price relative strength divergence indicator, price then falls back to its first level of support. This is it. If price closes below 2502.75, it's a 30-minute time frame chart. So as we come into 130, that'll signal that the pattern that we just looked at is of a little bit more consequence. A little bit more consequence than what we see on the 30-minute time frame chart. You might say, well, consequence to take us where? The price projection that I would come up with, I'd look at a couple of different things, but initially off the cuff here would be a price level of 24.93. We're at 25.02, so that's a nice 9 points from below where we're trading. You've got to close below that 30-minute market profile in order. Remember, bullish structured box, so we'll pay attention to that at 130 out here. Where could price head to? Then I step things up. I step my game up a bit. What I mean by that is I go from a 30-minute chart to a 2-hour chart, kind of a big step out here. And on the 2-hour chart, is there anything that shows a real topping signal? And the answer there is no. 24.99 is its level of support. That happens to be the top of that weekly box out there. So that's what's going on in the ES Mini on the short term. If I step it up one more notch, that would be the 4-hour chart, 240-minute time frame chart out here. And right now, at the moment, it's trying to produce one of those price relative strength divergent patterns as the 30-minute chart did. So the 30-minute chart is going to give us a key as to really what's going to take place, at least I'll call it shorter term, because we're going 30, 120, and then now 240 out here with regard to what price might do. Now, if this 240 chart is going to kick in, then what we really need to see, and here price could pull back to the 24.96 level, maybe 24.88. What we really need to see take place, we really need to see market breadth inside the S&P 500 start to topple over to the bearish side. Now, this is a 60-minute time frame. This is 1 hour. We'll switch to 240 momentarily, but you would see this chart here get to a bearish crossover, meaning the green line would dip below the red line, or the red line above the green line out here. This is telling us the number of issues inside the S&P 500, how many are above zero, how many are below zero. If we want to take a look at how many are between the box, we can just go ahead and turn that line on as well. At this stage of the game, we're just paying attention to above and below the box. So 217 on a 60-minute time frame above the box, 43.4%, and 34.2% or 171 are below the box out here. So this is still market breadth bullish. This is the 60-minute time frame. So we've got the 30-minute signals to know what to look for. In the 60-minute time frame out here, if that 240 is going to really kick in, you would see a crossover here. I believe when we switch it over to that 4-hour chart, you're going to see it's a way from getting to that bearish cross out here. The last bullish cross, how important are these messages? Well, the last bullish cross took place on September 7th at 12 noon. A pretty decent indication to go ahead and take at least a short-term trade to the upside. Steve Rhodes with TFNN. Right. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 72, S&P is up 5. So we're looking at the short-term charts, really kind of analyzing the S&P 500. And at this stage here, the trend has not changed. We've clearly seen that amongst the different chart timeframes that we're looking at. On the daily chart, in order for things to potentially get rolling, we'll look at both sides of the trade out here. It's just incumbent upon both you and I to do that. And in order for things to really start getting testy to the downside inside the S-mini, you need to see it close below 2487. 2487, you're 2503. This is the ES Mini we're talking about right now. So you're looking at what, about another 15 points or so to the downside in order for it to start to get your skirt into a little bit of a tizzy out there. Not that there's not support below that level. There is 2487, but getting below that suggests you go explore 2466 or so. So that's the downside potential action out here. What if that action really is nothing more than we're just taking a bit of a respite maybe for a day or two? Then where in the heck would the Sam heck, by the way, would the S&P 500 head to? So I think that's an excellent question. Let's go explore that possibility. What's the upside possibility? Well, if it's not really the 2,500 level, people make a big deal about, 2,500 or 2,600 or 3,000 or just these whole numbers out here. I say like a bad flavor, a bad taste in our mouth out here. You and I have got much better sets of tools to be able to figure out where the real levels of resistance or support. Inside the S&P 500, as an example, on a weekly chart, that's what we've got up right now, and you can see the horizontal trading range. You can see the midpoints as well as the significant levels of support or resistance. You got 2475 was the number. It's not 2,500. It's not 2,600. On a weekly time frame, it was 2475. You can see how that level acted as resistance, significant resistance. we know that the body of the candle is truly the essence of price. The wicks, the upper lower shadow, is nothing more than just the extreme emotion during that time frame. This is a weekly that we're looking at. So there's a potential for 25.13. These midpoints can be areas where price starts to pull back and pull back where into support. Support. If the S&P breaks below 2,500, don't believe that it's over. Golly, don't believe that. You know that 2475 is a key level. It's not 2500. Now, 2551 is really what the weekly chart is suggesting to you and I is the upside, the next upside potential where resistance would come in, 2551. Now, again, we use these numbers here as guidelines. We don't use them to be necessarily exact, but 2475 is plenty enough away from the 2500 area. If we take a little bit longer-term view out here, because the market is doing wonderful things during this unfavorable seasonal cycle. Unfavorable seasonal cycle beginning not in May, but in July. July through, we'll call it October 13th out here. Yeah, and I'm very familiar with unfavorable seasonal cycles, such as hurricanes, right? Yeah, hurricanes have an unfavorable seasonal cycle. We happen to be in one right now. Last week at this time, I was digging out of a mess, sweating because there was no electricity because that $5 part failed on that Generac generator out there. By the way, there's still major problems down here in South Florida. Yesterday I was out and about down in Fort Lauderdale. The traffic lights, the ones that are working, are running off of generators. Now, I know they're doing everything they can to get stuff up and running, but it's still a struggle down here. But nonetheless, I'm going to turn into a hurricane hunter, apparently, because I'm going up to a wedding in Nantucket, supposed to leave on Wednesday. We'll be leaving on Wednesday, at least heading north on Wednesday. And they've got a tropical storm force winds supposedly coming in over that island. It's going to make a real fun couple rounds of golf, let alone a wedding out there. But in any event, back to the monthly chart for the S&P 500. The monthly chart for the S&P 500 says where the S&P is headed to is 2683. The number here that price would have to get below for that forecast, this is a good forecast with regard to where price is headed to, needs to close below 2422. Then that could bring in all kinds of other issues for us to take a look at. But real support inside the S&P 500, 2422. Otherwise, yeah, you should buy the next dip if there is such a next dip. If we were fortunate enough to get that dip down to 24.22, it's not, it's 80 points or so to the downside. Are we going to get that? I don't know. But if you did get that, that would be a gift of a lifetime. If I told you that now and price got down there, you'd probably not be sure whether to buy it at that stage. But that is an excellent level of support. So if we ask the question, hey, Steve, where's price headed to in the S&P 500, at least by the end of 2017, you would say 2683. You see, 2600 would not even enter your mind as a round number that would create a problem for the S&P 500. The last chart that we could look at here would be the daily horizontal trading ranges. These are the blue lines out here. 2520 is the number where price could head to before it starts to turn around, and 2602 is its horizontal trading range level. So how are we going to summarize this? Look, it's very simple. In the ES Mini, the 30-minute time frame, we've got a topping pattern. If price closes below the bottom of that market profile, right around this 2502 level, it's going to tell us we've got more of a retracement. Is it a top? Is it a top of significance? I don't know. You have to take these things one step at a time out here. The 30-minute chart says, well, you go look at the 60-minute. Do I have a 60-minute chart? Hey, if you ask, I've got it. Here's the 60-minute chart. What is this suggesting to us? Well, 60-minute chart actually gave us a nice little price relative strength divergent pattern. That happened to form a nice little shooting star. So that's a beauty out here. You can see that it also has a bottom of its box, a structured bullish structured box to the 2502 level. So that's a beautiful thing out here with regard to close below. You can see that nice big old bullish engulfing candle right around the 2499 level out here. So that would be a key area to be watching for. And then, of course, if there's going to be something that turns into more of a ruckus to the downside, well, we would see our market breadth. We'd see a crossover. We don't have that at 1:25 in the afternoon. At least we do not have that on the 60-minute time frame. Now, that was just breaking apart the S&P 500. That took nearly a quarter, maybe even more than a quarter of the hour, but felt it was worthwhile. I don't see any questions that have rolled in here. So So in any event, now, that's kind of the market setup. Well, sort of the market setup is kind of, sort of. If I look at the New York Stock Exchange out here, it's going to be interesting to see. For me, it's going to be interesting to see where this thing closes today. Earlier this morning, while price was up at the highs inside the NYSE, well, the old advanced decline oscillator out here got actually up towards the plus 150 level. If that sucker closes above 150, and it's not a sucker, but if it does close above 150 out here, you're 121 right now. Boy, that's just the promise. It's almost like a guarantee that you are going to see higher prices inside the New York Stock Exchange. Doesn't mean tomorrow, but it just supports what you and I just looked at as far as a longer-term time frame for the S&P 500. At this stage here, what we've seen taking place is we have seen price moving higher inside the NYSE. Whoops, I didn't mean to grab that. I meant to grab this. Here, we'll try to see what color is this. Green. Yeah, it's a green arrow. So we have seen prices, in essence, since September 1st. Whoa. Believe me, we've seen it move. Oh, got to be kidding me. Let's try it one more. Third time is the charm. Move higher, but we have not achieved a higher high inside that advanced decline oscillator. It's subtle, but true, and it could be a problem. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. folks, so a couple questions that have rolled in here. First from Danny in Atlanta. He wanted to take a look at the yen and gold, and that actually fits into a question from Z inside of Tigers Den with regard to the 30-year Treasury trade that looks to me like you are in out there. So if we take a look at the yen, what we're going to see is this continues to weaken. Now, as this weakens, what we typically see out there is we see both gold and T-bond futures weaken. That correlation has been alive and well and kicking and screaming. Why it exists out there, I don't know. It doesn't matter. Just you need to know that it does exist out here. And that existence, when I take a look at the yen, I don't see any kind of bottom as of yet. We'll go take a look at the profiles on one of my other charts out here. But Danny, this is looking good. I don't see a base. I don't see anything other than the fact that we're starting to see the price oscillator. That's the bottom panel of my screen get back towards zero. As that line hits the zero level, we should see the yen stall. So therefore, if you see the 30-year Treasury stall, I'm not saying we're there today, but when that occurs, and if you see gold stall, don't necessarily buy into the fact that means that's a bottom. Right? Instead, anticipate ahead of time what the pattern or what price is likely to do, and then as it occurs, then you can say, "Oh, okay. Well, I expected this to because this is the normal pattern that Stevie shared with me out here." Are we there yet? No. But the yen, is there any reason for this thing to not continue to decline? Not that we see, technically speaking, from a chart standpoint. In fact, price could easily get back all the way down to the lows in July out here. Now, just because it's a directional indicator, it's because the yen gets back to the lows doesn't mean that T-bond futures or that gold gets back to that area. It can, but doesn't mean that it has to. That's not how it works. With regard to Goldilocks out here, Daniel, we can take a look at its current contract. Formed a beautiful butterfly sell pattern. That sell pattern, that took place last week, Monday, September 11th, when price went ahead and gapped down. Now we can see that this is potentially an A to B equals CD already to the downside. That would look like this with regard to different price projections out here. And the reason why I'm using this as the A to B equals CD, and let me turn it off first, is we saw a move down into September 14th, and then we saw that ideal test. That was really the third test that we saw where price back on Friday made it all the way up to Stevie's red line and then turned right back down, telling you that the sellers had dug their heels in. And in fact, they have been dug in. So that gives us our B and C point for the A to B equals CD, a very short-term one, very small one out here. But nonetheless, this gives you 1295, 1283, the 1 to 1.272. I think it's more likely that 1280-ish area, 1283, Danny, before we should anticipate that that's where gold is going to head to. Is it going to go lower? Possibly. But that's the area for us to be paying attention to, one of the areas for us to be paying attention to with regard to gold. Now we'll go back and take a look at some other tools here. Now we'll just do it right now. Forget about it. We'll go back to it. What are you talking about? Do it right now, Steve-O. Here are the 4 time frames, 6240 daily and weekly charts for Stevie's synthetic contract. They're really important when you just have rolled over contracts as we have now. Brand new weekly profile, Daniel. Brand new, spanking, brand new this week out here with regard to the gold contract. If I put up the December contract, we wouldn't see it out here. But because of Stevie's synthetic version of this, we've got enough data to give us a good profile. Because price is below the daily, below the 60, below the 240. So there's nada, zilch, nothing there for you and I to hang our hat on. Where we can hang our hat is at the 1280 level. So now we have the 1 to 1.272-ish A to B equals CD. We've got the center of the box at 1280. And if that doesn't hold things, then what we're looking at is 1257. That would be a beautiful thing. In fact, 1257 right now, that weekly box has a bullish structure. Center of the box closer to the bottom. That could be the ideal buy area. That is what's going on inside of gold. The question with regard to the 30-year Treasury was, hey, Steve-O, is it possible to see this get down to the 151 area, which would get us back in towards that July level? And the answer there is yes, absolutely. Now, in this case here, where it was really easy to draw the A to B equals CD pattern, if I use, in essence, the same days and swing points out here, and this did form with a 7th wave move to the upside, that's going to get you down to that 151 area, your potential price projection that you are looking at. That gets back all the way to the lows in July out here. So, yeah, that's what it looks like to me as we trade at the moment. With the information we have right now, there's nothing to suggest otherwise that prices. So you've got everything lined up, right? You've got the yen lining up with bonds, or really, it's really the bonds lining up with the yen, and gold lining up with the yen, because it is the yen with regard to who is the dog. That's the dog, and these other ones are nothing more than the tail of that dog out there. So now this is a good thing. In the case of, when I say this is a good thing, it's potentially a good thing with regard to gold. With regard to bonds, if we get down to the 151 level, then what we have is a good old-fashioned consolidation, with the 150-ish area being the bottom and the 157 area being the top out there. And that becomes a nice tradable pattern, especially if the yen is able to go ahead and find its bottom. And in the case of Goldilocks, it could be a higher bottom. And that, my friends, would be a good thing. That would say that the uptrend that we're in is still intact. And how are we going to know if that's the case out here? Well, we're going to wait to see these patterns as they unfold. We're going to put all those three things together to give us that signal as to what the market is doing. You can see in the case of gold, price oscillator, bottom panel, nowhere near its zero line. I believe the same thing with regard to the 30-year Treasury bond out here. So it's the yen that will really be focused on and paying attention to see what happens as it deals with the zero line. Not today, probably not tomorrow, but maybe over the course of the next couple of days out there. So I hope that answers your questions, all of those coming from the Tiger Den out here. I'm going to check right now, check the old cell phone, see if there's any other requests out here. Yep, Suman has a request, wants to take a look at Oracle. Steve, what do you think about Oracle? Where will the buy be? So let's go take a look at Oracle, ORCL out here. Let's look at our 3 time frames with regard to our market profiles. Then we'll go see if there's some other patterns out here. Yikes. Ouch. Ooh. Oh. Talk about wide-ranging bars off of the highs out here. Well, Oracle's got it. And what we don't like about Oracle right now with regard to the daily chart, really 2 things. Volume to the downside, 66 million shares. That's after breaking out back on June 22nd with 63 million shares. So, Suman, here's what I would say. It looks like Oracle is in kind of one of our good old-fashioned potential consolidations out here. Now, the swing point that it's dealing with right now happens to be August 11 million shares. You're at 16 million shares today. Don't even think about touching this thing. Not now. Not until we at least see what takes place as Oracle gets down into the June 21st level, somewhere around 46.54, but could be lower out here. That's what the daily chart is telling us. Zooming on the weekly chart, it's telling us, hey, don't look at touching this thing until you get to about 45.36, maybe 44.55. And 45.24 is the number on the monthly chart. So Oracle, put it on hold for the time being. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi folks, this is Tom O'Brien. Join me in Boston on September 30th as I return to my hometown for a workshop about the art of timing the trade. I look forward to seeing all the Tigers and Tigresses for this special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow's up 79. S&P is up 6. Gold down $15 right now. Let's go out to Philadelphia and speak live with John. John, thanks for calling. Thanks for holding. How was your weekend?
Steve, always excellent. Hope and trust things back down there in southeast Florida are starting to get back to normal for you guys.
They're getting back, slow but sure. But they thank goodness for all of the volunteers, all the effort by all the different power companies that are down here just working their little fannies off trying to get power restored. Power is an important thing.
Yeah, that is a beautiful thing. All those people pulling together.
Absolutely.
Steve, thank you for reviewing the bonds, yen, and gold in that last segment. I have a follow-up question.
Yes.
Just to ask of you, please. As you know, and it pertains to gold, and we've had enough history together that you understand I like to do all sorts of scenario planning and not commit. And fact of the matter, it's rare for me to commit in my own thinking to one market outcome or market outlook.
Sure.
So with that in mind, gold clearly, the past 6 days, has dropped very nicely. It's now dropped $53, $54 off the high, $13.62 down to $13.0908. And that's a nice, stiff, deep pullback. And I am, and you laid out, given the yen, the bonds, the gold, the data, the ideas that would support the scenario, a further pullback.
Yes.
I wanted to tell you the bullish scenario that I can envision, and I'm not making any statement that I believe this to be true.
Yeah.
But the bullish scenario that I see is that gold pulls back and holds above two just very obvious points. One is the 1307. That's the Dees Gold swing high back from Friday, the 18th of August.
Sure.
And then the second is that double high at the 1295,678 highs, those were the April and the June high. And given that East Gold has come right back to 1308.7, that's the exact low thus far, just in the past 60 minutes.
Yep.
That is so close to that August 18th swing high 1307.
Sure.
It draws my interest. So as a trader, I've got up to 5 and 10 minute bar charts for looking for evidence of what the buyers and sellers do right at this level. So I look at this and say, okay, fine, John, this is a time to be looking for a candidate for a correction low. So that's me. That's what I'm doing. I ask you the question, is there anything in the work that you do, being altogether different from what I do, that would suggest there's a chance of a bottom forming in here? That's my question to you, sir.
Okay, so let's do a couple of different things. That's a great question, and you're using a multiple time frames, shorter-term time frames, because you've got price falling down to a longer-term, daily time frame, and now you're trying to search around and see if there's any type of bottoming signal out here. So I take a look at my 30-minute chart. I'll just start with a 30-minute chart, and just to see, is there anything that pops out that says, okay, bottom candidate out here as we speak? Could be a TD sequential count, could be price moving lower with less relative energy, could be price above a TAS market profile, could be above my red line, the oscillator and change line. None of those exist on a 30-minute time frame. We can change from 30-minute to 10-minute relatively quickly. Let's see how quickly it actually populates. So we've gone from the 30-minute down to the ultra shorter term time frame. The ultra shorter term time frame was there was a nice little TD sequential count that came in at 1340. So 140, we're at 147 right now. So you know the play there is that you'd have to see a close above the session 4 bars earlier. So it's got to be above 1, 2, 3, 4, above 1310. Is what you would need to see there in order for that really short-term, ultra-short-term TD sequential count to take place. I would say to you, you really need to see it close above the 10-minute market profile, 1311.80. If I put this other chart on the screen, it may be easier to see for you here with the black. And so it's at 1310. In this case here, it's 1310.10 would be the level that you'd really like to see price close above in order to give you the indication that what you're looking for has some real potential legs to it. If you don't get that, anything that moves up to 1310 and fails is just a little bit of this counter trend rally. Now that's the short-term time frame. You mentioned 10-minute. What other time frame chart do you look at, John, for short term?
Yeah, the 5, 10, 30, and then I jump up to the 2-hour bar chart, and then that 5 hour. So those are the time frames I use.
Great. Okay, so on a 5-minute basis out here, just looking for that, and I know that you can also be quick in, quick out if price isn't acting the way that you like to see it. On a 5-minute time frame chart out here, while this is populating, really the same kinds of things out here. It keeps bringing back this 1311 area with regard to wanting to see price get above to at least confirm the signal that you are looking at. Let's take a look at gold. If I look at yen, kind of the same way out here. This is a 4-hour chart. 4-hour chart on the yen had a TD sequential count signal a couple of hours ago, but we're nowhere near closing above the bar 4 bars earlier, at least not yet. If I switch down to a 10-minute time frame out here for the yen, because if we're going to see a bottom in one, we're going to see a bottom in the other. I don't see anything here to give us hope, not just yet. So that's what 1311. Then I say go for it. If not, then I think the more likely outcome is what I shared in the previous segment, and the area that I would be watching for It's not much lower than where it is now. It violates, I think, those swing point tops. But you can tell me. Would be this 1292 area. This is a weekly chart for gold, and these are the green horizontal trading range levels. And 1292 and change has been the target, has been the magnet. This takes us back into, I believe, the 2009 time frame out here. It does. And 1292.20, to be exact, has been the largest consolidation of opened or closed sessions. Granted, it is weekly, but even though it's weekly, 1292.20 should be a level of support out there. So if those other levels fail, don't ignore 1292.20. And it closed below 1292.20, says 12 and a quarter out there. All right, Johnny?
Steve-O, thanks so much. I do appreciate it.
You bet. Thanks so much for calling. That was John in Philadelphia, and that was Goldilocks. Dow is up 84. S&P's up 6. Steve Rhodes with TFNN. We'll be right back.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So let me finish it off. I do a segment on Mondays, as long as I'm here, hurricane-wise, all that type of stuff with Tom. I wasn't sure what I was going to cover on this segment here, but because of the call with John in Philly, I do know what I'll cover. And that is, I created an indicator called the Rhodes Momentum Indicator years ago, and so I'm going to go back and take a look at gold out here for you, John, and all the others inside the Dental Tiger TV out here. You're going to see green and red boxes on my screen out here. Now, this uses a Stevie version of the relative strength indicator out here. It's all about momentum. In this case here, on a 30-minute time frame, you just notice all of these green, all these green little squares. This is, again, 30 minutes. This is coming off the time frame of the highs out here at about 7:30 in the evening on September 14th. And all you see are these green boxes, right? That is telling you selling pressure, selling pressure, selling pressure. Now, you didn't necessarily need me to tell you that because you can see price moving lower. So, I could have figured that out, Steve. Nice indicator. No, that's not the point. The point is that this is kind of like the EKG of the market on whatever time frame it is that you use. And a normal breathing pattern, even on a normal decline or a normal move higher, is like an EKG, goes between an upper and a lower threshold. That's an easy explanation. This here identifies those lower and upper thresholds. Red is an upper threshold. Green is a lower threshold. When you don't even breathe to the upside, EKG-wise, hit the upper threshold, it is telling you about momentum to the downside out here, and it is still in play, as a president might like to say, big time. I don't even know what the heck does that mean. Where's that big time even come from? But nonetheless, now here's the 10-minute time frame looking at these momentum indicators. You'll see a few red ones out here, just counter trend rallies. So it's not in the cards, folks. I know everybody's looking for a bottom in gold. It's not on a 10-minute chart. It's not on a 30-minute chart as we speak at 1:56 in the afternoon. I'll update that, and that's what I'll do during my segment with Tom. Stay tuned, because your favorite polar bear in mine, David White. Oh, it's Big League. That's right. He's up next. Take care, folks. We'll see you later. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.